My name is Adrian Meager and I'm the Chief Investment Officer of Orion Investment Managers. Welcome to our Navigating a More Constrained Market Environment presentation. Markets have remained resilient, but navigating today's investment environment is becoming increasingly complex. In this June 2026 update, we unpack what's driving market and what it means for portfolios. Global markets continue to deliver positive returns, supported largely by strong US corporate earnings. However, the environment is shifting. Higher oil prices and rising bond yields are reinforcing inflation pressures, and interest rates are likely to stay higher for longer. As a result, the broad gains seen earlier in the cycle are fading, and performance is now increasingly driven by selective, high-quality investments rather than broad market exposure. While markets remain functional, the broader backdrop is becoming more constrained. Central banks have less flexibility to support growth, and opportunities are narrowing, favoring companies with strong balance sheets, consistent earnings, and pricing power. Credit markets continue to offer income, but selectivity is key. Investment-grade bonds, particularly in the United States, remain relatively stable and provide a reliable source of income. High-yield bonds offer attractive returns, but with elevated risk, making short-duration exposure more appropriate in this type of environment. US government bonds continue to play an important role in providing diversification, even as yields move higher. At the same time, emerging market debt has become less attractive due to currency weakness and increased volatility. Equity performance is becoming more uneven across regions. US equities have delivered strong returns driven by technology and AI-related companies. However, valuations remain elevated and market performance is increasingly concentrated in a small number of large companies. In Europe and the UK, returns have been more moderate, while Japan has stood out as a strong performer. South African equities have been mixed, reflecting sensitivity to global conditions, commodity prices, and currency movements. Commodities, particularly oil, remain elevated due to geopolitical tensions and supply constraints. They continue to play a role as a source of inflation protection, although with increased volatility. For South African investors, the current environment presents both challenges and opportunities. Rising inflation, a weaker currency, and higher interest rates create pressure, but also enhance the appeal of income-generating assets. The focus remains on disciplined asset allocation, careful risk management, and maintaining diversification across both global and local markets. In a more constrained world, success comes down to discipline, selectivity, and a long-term perspective. In summary, markets are still delivering returns, but the underlying conditions have become more demanding. The era of broad, easy gains are behind us, replaced by a more selective environment where outcomes depend increasingly on quality, resilience, and pricing power. Investors are now navigating a landscape shaped by persistent inflation, higher interest rates, and elevated energy costs, factors that are tightening financial conditions and reducing policy flexibility. At the same time, opportunities still exist, but they are narrower and require a more disciplined, active approach to portfolio construction. Diversification remains critical across asset classes, regions, and risk exposures, while income generation, duration management, and balance sheet strength are becoming more important drivers of returns. Ultimately, this is a market that rewards patience, rigorous risk management, and a clear long-term investment framework. Thank you for watching, and for more insights and ongoing market updates, subscribe to our channel and stay informed, because in markets like these, informed investors have the edge.